If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today is September 25th, 2020. And today is Friday morning. So looking at the highlights of the day, the markets are trading very much in a bearish atmosphere, which means there's no consistency. There's no follow through. It's 500 points up, 500 points down. And it's really very indicative. That kind of atmosphere shows that we're in a bearish atmosphere. Okay, there's no follow through. And so first, let's take a look at the various markets though. So looking at the various markets today, starting out with the currencies, really in a very tight range. The major symbols really not trading with much volatility. The indices, like I mentioned before, are trading in a roller coaster. 500 points up, 500 points down, and no consistency towards the end of the day. Lastly, and following, gold bounces from its multi-year support of 1855. Great place to pick it up. Oil is pretty much steady. And lastly, looking at the stocks, it's pretty much mixed, which is another sign that we're living in a very bearish atmosphere. Bearish means that we're anticipating the markets to go down at a certain point. Okay, so let's take a look at the markets and see what we can expect from today's trading. So we're going to start out here with the Euro USD at a daily chart. The reason why I'm starting with this is because if we look at this, you could see how really we've been in a very tight range yesterday. These two candlesticks, you could see the green ones, are where we've been trading over the past couple of days. I mean, relative to where we were, you know, all these other occurrences, okay, this is really a very tight range, okay, really not doing much. So with that said, okay, it did mention that it's a spot that we did anticipate it for it to bounce. Now, the most I think it's going to bounce is probably 1720 or 1722-ish area, that area. Okay, I think we're going to go further down. The reason I say this is because I anticipate the dollar to actually get stronger as the equity markets continue to sell off. Now, jumping into the GBP USD, we see a little bit of a breakout here on 127.87, but still we're in a very tight range. I mean, in the Euro USD, we're in a 50 to 60 pip range, where normally we're in about 100 to 150 pip range. Okay, and the GBP also, we're right now just breaking out from 127.55 up to 127.90, about a 45 pip rally. Okay, so relatively that's a very tight rally for the GBP USD. Jumping into commodities, this is really a great one. We're looking at the price of gold here. As it consolidated yesterday, okay, this was really a beautiful place to pick it up. And I mentioned this yesterday, 1855, we were churning out at this area. We broke above this 1861, and now we're pushing about 1874. Remember, our high on gold is 2,000 and change, okay? If we look at a daily chart, just to give us a perspective of that, okay, 2,072. So we do have some upside to that. So this really gave us a great opportunity to jump into it. Okay, but it's not too late. I think we're going to still rally into the end of the year. Now, jumping into the indices, okay, and this is really where most of the action happened yesterday. Let's look at a 30-minute chart just to give us a perspective. We consolidated early morning trading yesterday, okay? The stocks did look strong. Microsoft off the bell ring rallied from negative to positive. The markets went positive, okay, but couldn't sustain it. We rallied over 500 points from 26,553 up to 26,964, okay, over 400 points, and then just gave it up, okay? Look at that, okay? That is what I call a roller coaster. It just goes up and then goes down and goes up and goes down. This is not very easy to trade. You know, when you're trading something that continuously is going up on an inverse, okay, that is tradable, okay? But when you have something that just is relatively strong and then weak and then relatively strong and then weak, is a inconsistent environment, okay? So just realize that we are in this very inconsistent environment, and that means that it's a bearish environment, which means that most likely the markets will continue to sell off. Might not happen today, might not happen tomorrow, but it is a very inconsistent environment that we're trading in. Now, if we look at some of the stocks, okay, first let's look at the NASDAQ also. Did rally and did hold itself a little bit stronger than the Dow Jones, okay? But this does look like it's in a bona fide sell-off mode, okay? And if we do test this 10,700-ish level again, and we do break out of it, then the next real support level is 10,000. Okay. Now this is a classic V formation where, we rally, over the past 5 to 6 months since March 18th, okay, into this year. And then we're hitting the classical time frame of the fall in the northern hemisphere where the markets generally sell off, especially since we're going into an election year. So keep that in mind. Now, jumping into the individual stock, Microsoft was the strongest one, but faltered at the end of the day. Okay, if we look at Facebook or Apple, same story. Okay, actually not even bouncing that much on Facebook. Amazon did have a little bit of a rally above $3,000. Okay, so in all intents and purposes, I think we're going to continue churning up. And the reason I say churning as opposed to rallying is because I think it's mostly short coverings that are happening right now. Okay, when we look at some of the traditional stocks, okay, they are very weak. If we look at Cisco, okay, you guys remember I had this up since the beginning of August. It has not gone up and just continuously goes down. Okay, and Cisco is a very big company and a very important company for that as well. Okay, and it's really a bellwether, and it's a one that we look to as to the leading indicator of where the tech stocks are going. Okay, so despite the fact that we have an Apple and we have a Facebook and we have a lot of noise in the market, we're still compounded and bounded by traditional economy. Okay, and that's exactly what Cisco does. And so really I'm paying attention a lot to this, because if I see this breaking out further on the downside, then I'm going to say that we're possibly before the end of the year, the Dow Jones will be trading back down. Okay, if we look at a daily chart, we could be back down at the 23,400-ish level. Okay, we've already gone down about 50% of that. Okay, from 29,000 to 26,700-ish level. Okay, so if we do get that bounce at 27,384, I'd actually be looking to short this. Okay, long term. Okay, into let's say October, November time. Okay, but that is a big bounce for it. It's about 600 points. So we're not there yet. Okay, but we could be churning in the next few days as this continues to consolidate about these areas. So going into this weekend, I don't expect tremendous volatility, but as next week continues, I do expect it to bounce a little bit more. This is Fred Razak. I want to wish you guys a great trading day and a beautiful weekend. Thank you.